Hello, this is Ron Brown. I had a support question from a customer about how to measure relative strength in HCSI, and it can be a little bit confusing because there are several ways to measure relative strength. First of all, I'm going to begin in the warehouse module. As you can see, I'm in the NASDAQ 100 stocks, and I am going to go over here to this column, which is the relative strength rank column. And this number represents the relative strength of any of these stocks compared to the stocks in the database, all the securities in the database. So in other words, if, looking at applied materials, it has an RS rank of 84, which means it outperformed 84% of all of the other stocks in the database. Now I'm going to go down here and locate Apple. You can see that it has an RS rank of 70. Now this ranking method here is based upon a 1-year time frame, and 40% of the ranking is based upon the last quarter, and the other 3 prior quarters get 20% apiece. In other words, the quarter 1 year ago, that first quarter is 20%, the second quarter is 20%, the third quarter is 20%, and the most recent quarter is 40%. And that's how this RS rank is derived. So if if a security, I should say, is in the top percentile, which is 80% or above, it's green. If it's in the middle section from 60 to 79, it's yellow, and anything below 60 is red. So that's just a color designation to show us how these stocks stack up in comparison. You can either use the number or you can look at the color. It's just a breakdown visually of where these stand. Now, of course, you want to use a number because a number is much more precise. It's easy to tell that Align Technology, along with here let's look at Netflix. These are at the top of the list. They're 96, as is Nvidia. So these 4 stocks are outperforming the rest of the NASDAQ 100 stocks because they are in the 96th percentile. Now I'm going to go to all securities, and these are stocks that are assigned to groups in HCSI. And you can see that there are several stocks that have a 99. So these stocks, well, anything above 97 and above is outperforming any of the NASDAQ 100 stocks. And this goes all the way down to number 164. Now just remember, this is based upon that 1-year time period with 40% of the emphasis on the last quarter. So you can have charts that do not look all that strong, but they still have a high relative strength rank because it's spread out through the entire year. Let's just take a look here. I'm not familiar with some of these stocks, or a lot of them, but I'm going to look at AMPE. I'll just bring up a chart, and you can see that it's well off of its 52-week high, but it is holding up. Why, if it's come down from this point, is it still in the 99 percentile rank? Well, I'm trying to point this out to you, but I need a year's worth of data. So I'm going to squeeze this, and I'll just make this chart full frame, and I need to go back to 2/16 of 17. So I'm getting right here. There it is right there. I'm going to bring up my alternate, or click on alternate A. I'm going to draw a line from that point to the closing price on Friday. And if you look down here at the bottom, you will see that this stock, even though it's off its 52-week high, over the last year is up 224.9%, or somewhere 225% over 252 trading days. What this means is that even though it's well down from its 52-week high, and I'll just draw this here and get an approximate number here, it's down 40% over the last 33 periods. It has still outperformed most other stocks in the database. That's why it has a 99 percentile ranking, or I should say rank. And as I said, the 40% of the ranking is on the last quarter. So let's see, 1, 2, 3, somewhere in here approximately. Up to this point, this stock is up 142.6% approximately over 63 periods. This is another reason that it has such a high ranking. Or once again, I should say rank. So this is the way it works. You have to consider what this stock has done over the last year, and remember that the emphasis is on the last quarter. Now I'm going to click up here. I want to delete all those annotations, and I want to go back to the NASDAQ 100. Now 96 is a great RS rank, but you always need to look at the chart. You can't do this without looking at the chart to get a feel for it. So once again, I'm going to go into February. That's the 22nd. There's the 16th. Alternate A will bring this up. I already have the line selected to measure this, and I'm going to measure a line from this point to Friday's close, and you can see that it was up 148.8% or approximately over 252 periods. So you can understand by comparing these two stocks that that other pharmaceutical stock clearly outperformed a line. Thus, it has a RS rank of 96 compared to 99. Now this is a better chart. This stock has not fallen as much. In fact, it was one of the market leaders until we had this recent sell-off, but it is still maintaining its 96th percentile rank. So what we're doing here, in summary, is we're comparing the relative strength of these stocks to all of these stocks in the database, and that's how we come up with the rank. Now I'm going to do something else. I'm going to tile ranking and warehouse horizontally, and I'm going to look at the ranking module up here at the top, and I'm going to go in and change this to Ian Slow Relative Strength, which measures a stock over the last 6 months with 70% of the emphasis on the last 3 months. Now, looking at this, I'm going to use, I'm going to sort on raw combo. I'm going to use Apple for this example, and it has a 70 RS rank. But if I click through to the ranking module up here, you can see it has a 32 RS rank. Now you have to remember that with the ranking module, all you're comparing are the stocks within this folder. So within this folder, over the last 6 months, Apple, it ranks down at number 71, although it has a 70 RS rank down here. I'm going to bring a chart of Apple up, and you can see why. I'll zoom in on this because we only need 6 months. And Apple, for the past several months, has really done nothing. I mean, it's gyrated, but if I go from here back 1, 2, 3 months, you can see that it's essentially where it was 3 months ago, and this is where 60% of the ranking is using Ian Slow. So that represents 60%. And the other 1, 2, 3 months, this represents the other 40%. So they're two totally different ways of ranking. The thing you have to remember is that this folder is the only thing that's being ranked. Now the color coding is the same. Anything from 99 to 80 is green. Anything in here is yellow between 60 and 79, and anything below 59 is red. Now let's take this a step further. I'm going to go from the NASDAQ 100 and I'm going up to all securities. I'm going to rank all securities. Now it says 885.74, but I have a filter on here. I am just ranking the 3,441 stocks that are assigned to groups in HGSI. If I hit my space bar, I already have Apple in here as a symbol. I click on Find First. It is down here, clear at number 1900 or 1981, and the RS rank is 41. So comparing Apple to these 3,441 securities, it's down at number 1981, even though it has an RS rank of 70 here for the year. I am measuring 6 months here with Ian Slow, with 60% of the ranking on the last 6 months, or based upon the last 6 months. 3 months, I'm sorry. So any way we look at it, Apple has not been an impressive performer for long-term holders. Yes, it's been bouncing all over the place. It's been a good swing trade, and now everybody's piling into it because Warren Buffett, it's his largest holding now, so everybody thinks they want to own Apple. But on a relative strength basis, it has not performed. Now let's see how Apple has done compared to the SPX. I'm going to do it over 52 weeks, and I'll just click on that, and it's recalculating in the ranking module. And now we have a rank which is very comparable to the relative strength rank down here in the warehouse. I'm going to point this out with an arrow and point this out with an arrow. So now I'm using 1 year rather than Ian Slow, which is, as I've said many times, based upon 6 months. So we get a comparable ranking here when comparing to the SPX for the past 52 weeks. Now I'm going to change this from relative strength to raw relative strength, and this tells me that Apple at 109.33 has outperformed the S&P by 9.33% over the past 52 weeks. The S&P is always 100. That is the baseline, and any stock above that has outperformed the S&P over the last 52 weeks. Now, if I go in and change this to a different time frame, let's just try the last 4 weeks. And Apple has underperformed the S&P over the last 4 weeks. All I did was go in and change this comparative relative strength to 4 weeks. Now there are other methods of measuring relative strength, but I think it's just most important to be clear about what this RS rank means and what you're comparing up here when you're using the ranking module. Now one thing you can do, and I do this occasionally, I go to Ian Slow and recalculate, and I'll change this to just relative strength. And then I'm going back down to my warehouse module. There are 102 securities in here that meet the filter criteria. I'm going to click through to the ranking module. This gives me a different perspective. I am looking at applied materials, and let me click on that again. I'll go up here. It's clear down at number 51 based upon what has happened over the past 6 months with 70% of the ranking on the last 3 months. I can tell immediately by comparing these two that over the past year it's outperformed 84% of the securities in the database, but over the last 6 months it has not really done that well. So let me bring up the chart, and you can see if I make this full screen and zoom out And if I go back 1 year, I need a little more on this. Okay, back 1 year, somewhere in here to here, it has done very well. It's outperformed most stocks. But if I look at 3 months, let me go a little closer here. Over the past 3 months, it's really done very little. So consequently, between the two ranking modules, you're going to see a big difference. This would be considered actually shorter term, even though it's over 6 months, because of the 70% emphasis on the last 3 months. Now here's Apple over 3 months. You can see nothing has happened. But if I take a longer term, I'll just do a weekly chart on Apple. If I look at it from the longer term perspective, going back here, this is the last year, going from approximately here to where we currently are. It has outperformed the S&P, and it looks much better on a weekly chart than it does a daily chart, where it is just chopped around back to the daily over the past several months and has done nothing. So how can we use this information? Well, I think relative strength has much more value over the longer term. It's really doesn't do you any good for entering stocks and so on. Let me go back up here to the top, and I'll bring applied materials up. You're much better off once you know the relative strength, both in the RS module or in the ranking module or the RS rank. It just gives you an idea how these stocks stand relative to one another based upon their time frame. It also works for industry groups or anything in HCSI for that matter. It's only going to give you a relative comparison. That's why it's called relative strength. But for entries and exits, it has very little value in my opinion. I much prefer to work with one of the very, very strong aspects or tools, I should say, in HCSI, and that is volume price analysis. This program does a beautiful job of helping you stay on the right side of the market. Now, when you get waterfalls like this, when the market's in a panic, yeah, you can get bounce back days like this, and it'll throw you off and so on. But that's when you really have to use restraint and also risk control. But these signals are much more helpful than relative strength. But if you want to stick to stocks that have high relative strength based upon whatever time period, you can make a list of those stocks and only flip through those charts or screen on those stocks looking for VPA flags. Strong relative strength stocks, ETFs, and so on have a tendency to keep going. But like I said, I much prefer to use volume price analysis, tests of moving averages, support and resistance, things like that for entry rather than relying upon relative strength. They work well together, but relative strength, in my opinion, has no value for entering a position. It can give you confidence that you're getting into a strong stock and you're looking for an entry point on those stocks. Let's look at Netflix quickly, and then I'm going to end this. It has a relative strength rank of 96, and this is a daily chart. You can see that over the past, here's a weekly. You can see that over the past year, based upon this RS rank, this has been a monster, and it continues to go up. Now, where are good entry points? Well, on a weekly chart, these VPA flags work very well also. And if you have a layout like I'm using in my webinar series where you have a monthly, a weekly, and a daily, you can have the VPA flags all in front of you at the same time. But these VPA flags really give a feel for the strength and weakness of a stock. Notice on Netflix, it gapped up here. This is on an earnings gap. It pretty much held the gap, traded down here. If you had a support line going across here, it essentially held at support. So the fear that dominated this stock was reversed when buyers stepped up, when the big money stepped up, the smart money, and this is stopping volume. That's what this flag down here at the bottom is, and this is going from weak hands, this would be weak hands at the bottom of the wick, to strong hands when it closes near the top of its daily range. And this is all pointed out in HGSI in the VPA flags, and here it is. It's challenging its old high, not quite there yet. We are getting a sign of weakness. Let me just bring this information up. Indicator, edit indicator, volume price analysis. I'll display the VPA. And if I go back to this, you can see that a high volume down bar after an up move on high volume indicates weakness. At this point, this is a warning flag. This is a doji, or doji star. Actually, a doji star would probably be above this candle here. But it just means there is agreement here. Because it closed near the open, there's a wick on either end. So it's a sign to be careful. But the VPA, if you're using HGSI and you're not using VPA, you are missing out on the tremendous power of this program. I hope this helped clarify some of the ranking module and the RS rank information. HGSI has many ways to measure strength, and RS is a good way, but remember it's comparative. Up here you're comparing only what's in this folder. Down here you're comparing everything that's in the database. Thank you for listening.